Hi, welcome to the Market Alert for Thursday the 6th of July 2017. So yesterday a fairly quiet day, as we'd expect, first day back really from the Independence Day celebrations. The pound really quiet yesterday. You can see just sort of got stuck in this range and didn't do an awful lot. Managed to break out here, and then that was it really. And in the daily chart you can see that the last few days have been sideways here, very narrow range. Need something to happen on the political front with May and co to bring a bit of volatility into this market. The only thing that I would say with regards to the pound, just make a couple of adjustments here. If you go from the recent high down to the recent low on the bigger picture here, just delete that, you've got resistance in these two areas here. That obviously the 130, we can see there's resistance, and also we just move this down a bit, there we go. 76% will be 129.99, well 96, so 130 area. Watch this if the market moves higher, but it's going to need something to move it, and the markets aren't really going to move an awful lot, I wouldn't have thought, today. For this reason, the market is waiting for Friday's non-farm employment change. That's the big one of the month. We had the FOMC last night, so we'll move on to the Dow. You don't want to be in when they're actually in the market. You can see we had a couple of sell signals. You got the right tool there. This went down, and as you'd expect, the market then found support at the magical 21,400 level before moving back up, getting back above the 50 area. And then of course going forward you'll need to be out of this one before the news comes out, because you don't want to be in when the FOMC meet. It's one of those that's not a good idea to be in, and this was out at 7 PM last night. Interesting report from there as well. If we just switch back, and the Fed warns they catch up eventually, you know, it never ceases to amaze me. You've got the Fed warns equity prices are high, sees low volatility as a risk. Well, that's exactly what the implied volatility has been showing. Low volatility equals a massive move down the line and volatility returning to the market. It's as simple as that. Now, again, this is always a classic sign as well. As you see here, FOMC minutes show divided Fed fearful of high asset prices and low inflation. Well, again, what a surprise. I mean, these are the morons that have actually created this in the first place with their QE programs instead of letting the banks go to the wall. But that's another video. I've recorded videos about this before, and how they've inflated the bubbles in the bonds, the stocks and the housing market globally through the irrational exuberance of QE, as Greenspan would say. So that's where we're at with the markets. Let's have a quick look at the volatility, see what that's done on the or during yesterday's session, because it doesn't trade overnight. Let's have a quick look. And on the implied volatility front, we've got this. Well, what we've got here is quite simple. We've got a resistance at 9%. If I could draw the arrow straight, well, you can see that from these two figures here, and back to 874. Again, fairly quiet day, market moving higher, and as Yellen warns, low volatility is a high risk, and it is. We see it all the time. Eventually it breaks. This is certainly the longest time I've seen a market trade range bound with implied volatility at these low levels without the market actually breaking. So I know there's one coming down the line. It always does. Nothing stays the same. It's as simple as that. And eventually, when they allow the markets to find their own price discovery and fair value, then we'll get back to some decent trading. But at the moment it appears that they're selling the volatility and the VIX to keep the market on the highs, because they know if the stock market falls apart, the whole of their plan and illusion of keeping the markets, or giving the perception that everything's fine, in the financial world will be lost. So let's have a quick look at the bigger picture of the Dow, see what's going on here. We've got the market trading sideways, as you can see, and again, no surprise really, given that we're heading into the summer, which is not surprising at all. Market sideways, and a bit of resistance there, having come off the all-time high. So if I just draw this in for you, we've got we get the right spot would help. So off the high to the low, that's where we're looking for resistance should the market move back to the upside there. 21,525. And news wise for today, we should have the crude oil inventories out, I would have thought. Nothing in Europe. And where have we got? We got Powell speaking later on today. That's at 3 p.m. Medium impact news item, so it could give the market a bit of a lift. And then we've got crude oil inventories out at 4 p.m. as well. That could be a bit lively, as there's a sort of bit of news about yesterday that crude oil had moved sharply higher off the lows during yesterday's session. So maybe wise just to be out of this one, just in case it is a bit more volatile. Normally it's not, it hasn't been for some time, as I said before, but having had the Independence Day celebrations, it might just be a bit lively, and the fact that we had a bit of a good move yesterday in the crude oil market. Right, that will do it for today. Reporting if there's anything to notify you of. Other than that, thanks for watching. See you in the next one.